expect this kind of consolidation corrective action to continue here for a little while longer. It's going to be frustrating. But again, there's just some, markets just don't go straight up all the time. These are just things that we have to deal with, and having these corrections are completely normal. Again, there's no real indication right now of a bigger unraveling of the markets at the moment. Speaking of the markets, here's what you need to know before the bell this morning. We had 2 days of a fairly strong rally. Markets kind of rebounded back a bit, headed back up towards that 200-day moving average. Did sell off yesterday somewhat. And again, that's not really that surprising. That really doesn't change the outlook for the markets right now too much. Markets are very oversold. Kind of trying to form a bottom process here is not going to be, easy after the recent decline, because when you have these type of actions in the markets that are very quick, and you have these sharp downturns, it creates what's called trapped longs. And these are individuals that got swept up in the sell-off, and they're like, oh, I want to sell, but I'm going to wait for a bounce to sell into or whatever it is, and then the market just keeps going down, and so they're kind of trapped in the sell-off. So when the market does finally bounce, they're like, okay, there's the bounce, I'm getting out. And so you kind of get these waves of selling that come in as these trapped longs exit the market. But momentum is trying to improve here a bit. That's good news. Relative strength has turned up here a little bit. That's good news. What we would really like to see here is, and again, over the next couple of days, this market kind of try to push up here a bit. See some buying come into the markets. If we see money flows start to turn positive, that'll be a better indication that you're actually trying to form a bottom here. Would not be surprising, as we've talked about before, is that this market could come back down and retest these recent lows. So again, we have these lows that are kind of set in the markets. Markets come down, retest that low before you get a bounce and kind of form that bottom. That would not be surprising here at all for that to occur. So again, this market could be real sloppy here over the next couple of weeks. You've got a lot of overhead resistance sitting here right at the 200-day moving average. You've got the 20-day moving average that's now coming down to kind of coincide with that 200-day. So again, there's a lot of overhead resistance. The market's going to have to really work to try to get through that. So that's going to take a bit of time here, and probably a bit of frustration to try to get back up through those levels and eventually start to put the market back on more bullish footing. So expect this kind of consolidation corrective action to continue here for a little while longer. It's going to be frustrating. But again, there's just some, markets just don't go straight up all the time. These are just things that we have to deal with, and having these corrections are completely normal. Again, there's no real indication right now of a bigger unraveling of the markets at the moment. There's actually a good setup here from sentiment and other areas when looking at the markets for a rally. And remember also, too, we're about to go back into earnings season, so earnings will become supportive of these, because earnings estimates have been slashed quite a bit here over the last month or so for the next quarter. So for first quarter's earnings, those estimates have been slashed pretty dramatically. So as we get into April and start reporting first quarter earnings, there's going to be a higher beat rate because of that reduction in earnings estimates that haven't really impacted companies yet. So again, that's going to kind of filter in. So that should give some support to stocks as we get into the month of April. But again, between now and then, certainly expect a little bit here, more volatility. Continue to kind of manage your exposures, your risk, etc. As we kind of work through this process. Again, it's markets can't always go up. Sometimes we have to go through these corrective phases. That's all that's happening right now. Nothing really more than that at the moment. Moving over to bonds real quick. Bonds have been continuing to try to, been providing a decent hedge for portfolios as well. We got really kind of overbought a couple weeks ago. We talked about the fact that, hey, we're really overbought here. Expect kind of a pullback. Got that pullback, came down to support, sitting right here at the 100-day moving average, trying to hold that support level right now. Relative strength is trying to improve here a bit. So again, there's a possibility, depending on what happens with the Fed today, we could see a move in rates back up to around 92 on TLT. That put us right around 4.2%-ish, 4.1.5 on the 10-year Treasury rate. So again, much better bullish kind of action within the Treasury markets, really kind of going back to the beginning of this year. We've kind of got this whole trend of rising bottoms at the moment, which is certainly giving a better level of support. I'm going to get my computer to work here for me. We've got this kind of rising trend that's going on right now with the TLT. and bond prices. And of course, this is working itself into a wedge here a bit as well. So again, if we can get a move up in bonds, that should give us a better move higher later this year, because that would coincide with weaker economic growth, lower rates of inflation, as the impact of tariffs and other stuff that's going on right now, reduction in government spending, starts to weigh into the economy. Wages are declining. We're starting to see the slower wage growth, weaker employment as well. That should all feed into higher bond prices here later this year. So if we can move out of this kind of consolidation pattern and get above the 200-day moving average, it's a really good setup for bonds later this year. But again, we're just going to have to kind of work through this correction process right now. All right, that's what you need to know before the bell this morning.